Hey traders, it's Victor from TRADEPRO Academy. I hope everyone is super excited for this video. What I'm going to be doing is a trade review over the past week, select few days, and huge learning lessons. What I want to do is pinpoint some really quality learning lessons that you guys can take forward with your trading. I want to be doing more of these review videos so you guys can get a better understanding of my thought process, and it also helps me keep accountability. So I'll go through some statistics for the past month and a half, right, from the start of April, to break down what we got going on, as well as some of these trades over the last few days. Because as you may have known, or maybe not, right, if you follow us on social media, if you're in and around, I've had a decent bit of struggle with the slowness of the markets trying to come back to a high degree of patience so that we can wait for those highly qualified trades. So a lot of that, right, played also with some bias that I had in the overall market that kind of stalled out some of my ideas to accept for higher areas and higher distributions. So why don't we get right into this? We'll break this down and take a look at some of these statistics as well, and look at some of the trades along with the learning opportunities for this past week. One of the main things for this past week that I focused on that I was doing poorly in the weeks before was that I wasn't necessarily following the set plan that I had and kind of trading more so on the reactions rather than the anticipations of the market based on the system that I've created out of volume and order flow. So deviating away from that system and that process is huge, because when we talk about trading edges, right, an edge is something that has positive expectancy, right? And when you deviate away from that and you start doing different things, you start getting too reactionary to the market, something that I'm not used to, something that's not my style, not my general process, then you start losing money and you start just getting into the market based on what you think's supposed to happen rather than trading the plan that has the anticipation of XYZ given certain variables. So some of these statistics here, starting April 1st, right, we can see the last 2 days, I haven't had a loss, which is great, trading the S&P and the NAS. And one of the main things that I like to highlight here is average winning trades, 960 versus average losers. So a decent little ratio there. I like to keep it at that, if not more, right, at 2 to 1 or something. And one of the biggest things that I'm proud of is going to be the percent profitability, hovering around 70%. You can see in a market that's been pretty long only, what we've seen is the percent profitability on the longs is drastically higher, while the percent profitability at the beginning of April, right, to mid-April was very high, but it dropped off significantly, making many an error down to about like 55%, right? So on the short side, I've been doing fairly poorly. On the long side, obviously a lot better. So let's minimize these and take a look at what we got going on here. So first and foremost, like the last 2 days, the way I look at this is I set up a plan here at the tops, right? I'll put a plan on my chart so I can have something that's like right in front of me. So I'm looking at it constantly, and when I look at it constantly, realistically, I'm reminded that that's what I should be doing, right? The plan is based on distributions, auction, delta, order flow that allows me to identify who's in control and what is the probability of them keeping in control or failing that control. For example, today, when I was looking at the plan, I thought that, okay, well, we have longs above 53, like 22, 24 area. So what that means is we want a clean acceptance of the distribution higher where it runs like 6, 7, 8 points and then holds that area. But if we're constantly failing at that area and people are getting trapped, then I want to take the downside move, which you can see a few little trades here. And this is one of the things that I want to talk about from today's trading session on Friday, where I actually scratch, and I never scratch, and I'll tell you exactly why. Scratching, for me, it leaves it up to too much human emotion. It leaves it up to too high level of a decision-making process. The reasoning for that is if I have qualified the trade, I've already put in so much effort to identify that XYZ should happen at this area. The qualification for this trade was we're still holding the top band of that distribution at 24. You can see a lot of buying is getting absorbed into these highs, right? Constant buying, constant buying, constant buying. That puts us in a position where they're getting trapped realistically. And then when the selling comes in, then I have a high probability that these guys are indeed trapped, they're absorbed, and there's going to be a likelihood of a push lower. Another criteria for that was if I look at the market profile here in the corner, C period attempts to escape outside of the IB, and what happens is that we actually close right, back below the IB, which means that there's a high probability if we look to sell back into that, there's going to be the target of the downside of the IB. So trend days, they allow for it to escape outside of the IB during C period on the close where we can look for that continuation. But days like today, right, we get that failure, and I should have just held on to this trade, which could have increased those wins. So let's take a breakdown over the last 2 days here to solidify what's going on. So when we look at this, what I like to do is I want to break down where we stand in the grand scheme of the distribution. So we've just hit an all-time high. When we hit an all-time high, a lot of people are just trying to get long, they're jumping in, and there's constant buying, especially into highs. So my thought process was, realistically, if I'm looking at these distributions, the main distribution that has a more defined imbalance is around 53.24, and there's another area at this 53.36 region. So as long as we maintain above those two areas, realistically, I would be leaning towards the long side into Thursday's session. Well, another thing that helped me out with the idea behind that was that, okay, we get a IB close, right? We get a C period IB close above the IB. There's a lot of accumulation, very heavy delta into that 40 area. As we can see from this delta print over here, a lot of accumulation of buying that we're now above. So in my opinion, at that point, that makes for a solid pullback if I can get into those areas to try and swing it back into a new high to continue that trend. So that was the first trade. The second trade down here into these 36s area, right? Same thought process, the ledge of the distribution. And one of the things that I want to note when I'm trading is that I want to understand where the structural continuation is and where the order flow continuation is and where that actually breaks down. So if I'm looking at that based on these distributions, if we start losing 35, 36, where we also have, right, the accumulation of all this delta to hold, realistically, you get the offer. These guys get trapped into all this volume, and when you accept into a distribution lower, there's a high probability for that downside. And I just left it as is, right? I took those two longs, and then once it broke down, there was a high probability that it sold. I just walked away, right? I just wanted to keep what I had into Thursday and the days before, so I didn't do anything kind of drastic, because the weeks prior to that, I was a little less defensive, right, and got bit in the ass realistically. And that ass biting hurts, right? So you get a you get a little more defensive in these positions and how these things play out, because it just turns into just over trading, right? Too much of a reactionary trade, right? You're seeing all these things pile up, and like one of those breakdowns here, if we take a look at this like footprint, let's take a look here. If we look at the footprint that breaks down that 36, right, into yesterday's session, it became very obvious because a massive seller comes in, right? When I look at this, a huge seller came in, dumps this, we stay below the seller, they get trapped into the retest of the 34, 35. It's just telling us there's more downside. And if I look at this from a structural continuation, realistically, right, we close, where do we close? We close within a distribution lower, right, under 53.24. So on the overnight, I was looking at that as a trigger point for that downside momentum move, which is exactly what I was looking for. So today on the session, we trade into that area on the overnight, right? I live in Europe, so I can trade the Euro session. And then into the morning, what happens, right? They get clustered here, a lot of buy delta from the overnight and during the day session re-offers. It makes sense. Even though it's OPEX and it's choppy, I'm just trying to get in, get out, and then this one I scratched out because, again, I wasn't too confident in it, and I was proven right again to not scratch. So very limited trades. One of the main things that I learned throughout the past 2 weeks, right, at the beginning of May, I would say, end of April, when we kept rallying, I overtraded, right? I was taking like 5, 6, maybe 10 trades a day, which was just very, very unnecessary, realistically. Like, especially in these slow market conditions, these summer markets, you want to decrease the position size, and you want to decrease the trade frequency, right? And really, really stick to the plan. Play the extremes. Playing the extremes is one of the best things that works out for me. And another thing, right, when we talk about absorption, we talk about all this delta. NASDAQ is very, very, very kind with that. You can see the areas on NASDAQ extremely well. I still look at the plan on NASDAQ in terms of where the distributions are, right? If we review Thursday and Friday here, what we have on NASDAQ, right, new all-time highs. So we've got a distribution ledge that sits at 670. We've got another area that starts at 630-ish, but I was more interested in like 610. And then we have this region at 710. So we have this long move on Wednesday with an unfinished auction. So I would anticipate that that ledge at 670 would want to hold to keep these buyers at bay. That's the first move I want to see. I want to see these buyers sustaining that area. And what we had on NASDAQ on Thursday at the beginning of the session, right, was the clean movement where we saw a mix of absorption and exhaustion into these lows. You can see the clustering of all this delta down at that 670 where they constantly traded sold super aggressively. And what happened at that point, right? We got this continued clustering of all this delta into these lows, and eventually they peaked back up. So I was getting long into that area. Another thing that I noticed with NAS was that at 710, a very important area, they started to get trapped on the long side. About 400, or maybe not 400, that could be a lie. Maybe 200 buyers coming in, sweeping down, coming in, sweeping down. We push back down to the area. Now, I've noticed when these big individual buyers come in, especially on NASDAQ, and you go back to test them again, there's a high probability you're just going to run this higher. So we ran this thing higher. What happened was lower lows, lower highs, final chance above these areas where they were happy to move above, right? Big buyers getting trapped at 710. When we're above them, they're happy. So I want to look for a long into that area. But if the continued sell comes in, lower lows, lower highs, you're expecting that downward turn. And just like with auction theory, if I accept into a distribution lower on NASDAQ, meaning if I break under this 670 area, we enter into this minor distribution lower where those tops would do well to get sold realistically. You do well to sell them, complete the auction, come back down to that 610, 630 area and look for something there. So if I look at that, how that transpired on today's session, on the overnight, right, they held that area extremely well for that downside press. And what happens, right? They get absorbed on the overnight at the 620s. We come down throughout the morning session. What happens? Same thing happens again, right? They get trapped into that area. I didn't take any trades on this NASDAQ. I think I was waiting a little too much into that 610. So I got to really readjust what levels I'm specifically looking at. I think I was being a little too conservative, but it was OPEX realistically, so I have no shame. And again, this was a trade that I was calling out today where you can see all this delta flushing into these highs. Huge delta into the highs, massive delta into the lows. Like that long made a lot more sense in my opinion than the short. But I traded the S&P today. I took some profits on the S&P, had some on the overnight on NASDAQ. And then I said, you know what? Okay, I'll take this short. I'm seeing them get absorbed into the highs, right? Buyers keep coming in and failing. And I scratched it, right? I scratched it, and that just proves again that if I'm putting that much effort into qualifying the trade, right, I don't want to leave it up to emotions and the way that I think that things are happening rather than the information that's actually getting perceived. Right? If I'm able to concretely look at the information and take that information, it's much better than thinking, oh, okay, well, it's kind of red on this position. Let me just get out for like a slight little green. So I fumbled that trade after a very strong drop, so I didn't really make anything out of that, right? A few points maybe, if that. And with that, right, the main thing that I was focused on this week was my distribution ledges, my auctions, and where prices are getting absorbed, where the big clustering of delta happens. Because if I take out all the minor parts, right, and I focus on my plan relies on imbalances. Where are prices imbalanced, right? Let's look at this NASDAQ. If NASDAQ's imbalanced based on the distribution ledges, which sits at 670, and we're above that, I want to be long. If we're below that, we've accepted into a distribution lower, and I want to be short. If we get below 610, then I have a very good chance of looking for a 100-point drop on the NAS to continue the move, right? We have outliers like these where the auction incompletion starts at that 670. So when we have the concept of lower lows, lower highs, I look at it from a distribution perspective, but I also look at it from a delta perspective because this allows me to find where people are imbalanced. You can see very, very clearly on NASDAQ, like sometimes not so clearly on the S&P. That's why NASDAQ has a lot more opportunity when volatility is super low in these slow markets. So when I look at this, NASDAQ, right, you get them just clusters and clusters of delta on the overnight as well. Very, very thick areas where they just reject. They try to sell into them, then they bounce back up aggressively. These, for me, are high probability trades. Another thing is, right, when we accept into the distribution lower 670, yesterday's clustering of heavy delta, we're below that. So that means that those sellers want to continuously act and act and act so they can sustain whatever movement that they created into the end of yesterday's session. So if I think about it that way, how the market participants have reacted and are looking to react based on the volume and the imbalances that they've created, I have a higher probability of not only staying with the trend, but picking out good spots to actually enter and just leaving everything in the middle to the side, right? I don't need to trade the middle. I don't need to trade in these like little garbage areas. All I need to do is find areas that have these ledges and imbalances and wait for them, right? They could be 50, 60, 70 points apart on the NASDAQ, but it's worth it at that point so you can get your high probability setups. Because if I find an area that's imbalanced, there's a high probability that a large move happens from that area. So going forward, right, what's my plan in all this? Going forward, my plan realistically is going to be just trade these extremes. I don't have to have multiple trades a day, right? I can settle with one or two because realistically in the markets, that's pretty much what's offered. You get 1-2 high probability trades, and if you wait for those key extremes, they might happen, they might not, right? When you get all the qualification of people getting absorbed or trapped at those key extremes where volume gets heavy, where you have reactions on the DOM, those are the areas I want to get active in. So again, to review, my key extremes based on distribution ledges, right? The extremes of those distributions, the delta that gets created, that's either telling us that, okay, we're below all that sell delta that allows for the sellers to hold, or they're getting trapped into the lows, right? Those are the main areas that I can pinpoint to trade, and then I can do a little qualification on a footprint or on a DOM to tell me, okay, this is the right moment to get in. So I learned that, well, not that I learned it, but I've reminded myself of that, and I've reminded myself clearly today that scratching just doesn't work for me. It might work for some people, but I'm not able to make decisions like that. I've already made so many decisions to get into the trade. I have to just accept the risk that I have with my bracket and just let it go. So I hope you guys enjoyed this review, understood the learning lessons and what I'm looking for, and we'll do more of these. And let me know in the comments down below what more would you like to see. Thank you all. Enjoy the weekend, and we'll chat very soon.